Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. This week's video is going to be focusing on the third week of October. So it was probably one of the wildest weeks I've ever had as an investor. So if you watched the video last week, you know that Trump imposed some tariffs on China on top of the current tariffs up to 100%. That led to the markets dropping to where the portfolio was 132,487 last week. And there was some wild swings. So initially, what I predicted to happen was that Trump would put up some kind of tweet saying, well, that's not going to be the case. We're ready to negotiate, which did happen. But then what happened later on, which didn't happen in the past when these kind of tariffs were imposed, was that there was some fight back from China. So initially, and this is all to do with rare earth materials, which companies need for electronics and also defense. So these rare earth metals become crucial commodities, which China said that it's going to impose some restrictions on the US upon. China fought back and said that these tariffs were unreasonable. And it said that it will stop buying soybeans, which accounts for about $25 billion worth of revenue for US farmers. And the market then dropped again. Trump then retaliated, saying that US will no longer buy cooking oil from China and can use its own reserves or other reserves. As you can see from this article, Trump takes aim at cooking oil imports from China as soybean sales sink. And he said that I believe that China purposefully not buying our soybeans and causing difficulty for our soybean farmers is an economically hostile act. So there was some back and forth which caused some big volatility. But what it also did is give people the opportunity to then buy the dip. So if you watch my last video, I did mention that this is when real wealth is created, when there's dips within the whole market. And there were 3 opportunities for people to buy. I made my buys on Friday, so I didn't have too much money left, but I'm hoping that you viewers did deploy some capital. Now, comment below if you did or not. And the markets really dipped at the end of the week. But then, as Trump normally does, he did say, now these are all negotiation tactics. So Trump at the end of the week said that he admitted that 100% China tariffs were not sustainable. And he confirms that he'll be having a meeting with the president of China in about 2 weeks. So at the end, we actually ended the week up, which for me was very surprising considering all this crazy volatility out there. I didn't think that we would end up positive at the end, but we did. And we were up £800 with the portfolio ending at £133,292. So this volatility did erode a lot of the gains that I made this month. So if you look at the last month, I am now down instead of being up quite a lot. So at one point, I was up over £5,700 for the month. And now we're at negative. But we're still up for the last 3 months, up 10% for 11k profit. And overall, we are up £35,000. So I still think this is a buying opportunity. And I believe, in my opinion, that the markets will continue to go up until the end of the year. And one of the main reasons is this. So this is the CME Fed Watch, which basically accounts for the activity of interest rate traders. And it kind of gives the percentage likelihood from these trading volumes of rate cuts going forward. Now, if you look at this, there is a 98% chance that the interest rates will be cut at the end of this month. Also, there is a 93% chance that there's going to be a further rate cut in December. So with these 2 rate cuts stimulate the economy, they make borrowing cheaper for both consumers and companies, which usually results in growth and people putting their money into stocks. Going forward, if we look at March, the market thinks there's an 85% chance of a further rate cut. So we're looking at a big likelihood of rates being cut to 3.5 to 3.75% from the current 4 to 4.25%. And then in March, they're saying it's going to fall another quarter or half point to 3.25 to 3.5%. So with that in mind, it looks like there's going to be further bullish sentiment to stocks. So that's one of the reasons why I think, in my opinion anyway, that the market's going to continue to go up and I'm going to continue to be adding to my portfolio. Now, currently I do one video a week and I do get comments or messages sent to me saying that they would like more regular updates. Now, it's not always easy to make videos because they do take a long time to record, edit, and then release. So what I decided to do is launch a Substack where I will also write a bit more about just my thoughts about the economy and where things are heading, what stocks I like, what stocks I'm looking at. And also I will be updating people of when I make sales or buys of stock. So if you want, please join me on my Substack. In fact, I wrote an article yesterday on my top 10 holdings and the reasons why I hold them. And it gives you a thesis of those companies. And it might be interesting for you to read what my thought process is when buying some of these stocks. Now, it is free, but there is a paid option and it's not required, but it would be nice just for people to show appreciation. I know that I've helped a lot of people, especially my pie copiers. I have about 80 of those. And if you've held my pie for more than 6 months, then you would be up on your positions. So if I've helped you understand or invest a little bit better and you've made a few gains, then why not subscribe to my Substack just to give me a bit more validation that I'm bringing value through this channel and through my communication with my subscribers. And on that note, what is also free is if you like this video so other people can see it, if you subscribe to follow my journey and hit that bell icon to notify you when I do upload. Now, if we go back to the portfolio itself, we were up 0.7% for the week, which equates to £1,039. If we look at the weekly profit and loss for all the companies that I own, a lot of them are green. In terms of the losers, let's look at that. So the biggest loser is Hims, which recently launched a new product which the market liked, and then the CEO decided to sell a decent chunk of shares which the market didn't really like, and the share price plummeted a little bit. So this stock for me is on a bit of a watch now. I think it had a strong momentum, strong growth. The management dealt with that well, but this is the big one where now they're talking about more than, a couple of billion of revenue. Now it becomes a lot harder to grow. So let's see how they do. I will be giving them until the next earnings, but there are some alarm bells within this company, but let's see how they execute, which is the most important bit. Imperial Brands was down, which is a bit of a shock to me. Usually when there's volatility, tobacco stocks usually go up, but maybe that's actually not a bad sign because that means maybe the volatility is easing a little bit. So maybe a good indicator there. Oh, I just realized there's one bigger here, which is Robinhood, which went down 5.5%. I'm still very bullish on this stock. So I don't mind that. It gives me a chance to buy shares that cheaper. In terms of the ones that did well, let's look at that. So the best ones were, it seems like it was semiconductors. So you've got KLA at 12.73%, ASMR at 10.14%. And then you've got Google, which had a fantastic week, reaching all-time highs again at 7.32% up. And another semiconductor in Broadcom having a strong week. So overall up 0.7%, as you can see, and quite a bit of green, which again was surprising. Now, if you look at the overall positions themselves, still a lot of green as I built up a bit of a buffer as we're up so much for the year. And as you can see, Google's still the biggest at 47% up. Robinhood, even though it had a bit of a down week, still up 18.75% for a 1.7k gain. Imperial Brands still up 3.6k even after the stock went down almost 5% this week, which was a bit surprising considering there was so much volatility out there again, but still up. Meta up just over 20% for a £8,400 position, just under 6.3% of the overall portfolio. And then you've got Visa and MasterCard, which if you read my Substack, I do go into these positions and why I own them. And Visa and MasterCard essentially give me stability within my portfolio. They generally get 15 to 20% per annum. Struggling a little bit with the advent of stablecoins, but my understanding is that Visa and MasterCard both are creating products to help stablecoins as opposed to compete with them. And going forward, they are considered strong buys by many analysts on Wall Street. So these are going to stay within my portfolio and have a decent chunk attributed to them, combined over 10% at the moment. Microsoft up 30% for a 1.5K gain. Carnival up 83% for a 2.8K gain. Nvidia up 66% for a 2.5K gain almost. Tesla had a really good week actually, up 3K, getting close to the 100% mark again. Oscar Health up 18% for a £917 gain. This sector, I believe, is going to do quite well going forward. So both insurance companies within my portfolio, Oscar and United Health, are both going to, I think, do well by the end of the year. Then you've got Broadcom up 80%, which signed a very big deal with OpenAI, which everyone seems to be doing deals with them at the moment, really. But this made the share price go up quite a bit, especially in the beginning, and settling at 7.81% up this week at just under $350 per share. And I have 21.8 shares, and my cost basis was $188. Iron, my new position, which is down at the moment, but this one I think is going to pop very quickly, so I'm not worried about that. BMNR, Ethereum was down. Again, with rate cuts coming in, there's going to be an influx in liquidity in both Ethereum, Bitcoin, and other cryptos as well. And I think off the back of that, Bitmine is going to be doing well. In the meantime, as prices are down, BMNR or Bitmine is continuing to buy up Ethereum at cheap rates and trying to get to 5% supply, which when it does, they're going to start staking Ethereum, so it becomes an income source as well. So that's really interesting for the business model. United Health, as I mentioned earlier, up 1.5%, but again, this one I think will do well. HIMS down 12%, even though during the week it was up over 17% at one point, but then the situation with the CEO selling shares and making a comment on Twitter about the current short interest within the market made the share price go down. This one, again, as I mentioned earlier, for me is one that I will monitor, and potentially if the management struggles, then I will think about getting out of it. But they have a potential runway to make good numbers. So let's see from the next earnings how it does. Grab down 5.5%. Like a lot of these companies obviously have struggled because of the tariff news. Even though it kind of recovered at the end, it still had a big impact on a lot of these companies, which I was green on, and they should restabilize. Amazon up almost 11.5% for a £419 gain. Centrica, one of the few UK companies within my portfolio, but this one has shown its worth and it's doing really well. Good strong dividend payer too, up 1.2k for a 57.23%. So let's have a quick look at my holding there. So I have just under 1,900 shares. Obviously, UK companies tend to have smaller market caps and also smaller share prices, and this is why you can accumulate big numbers. I wish I had that many shares in Google, for example. I'd be a rich man. So my average cost is £1.10 and the current share price is £1.74. So this one is doing really well and will stay in my portfolio in the short to medium term. Then you got Costco up 16% for a £316 gain. Apple up 27.9% for a £438 gain. ASML really recovering strongly this one. So let's have a quick look. Up over $1,000 a share. If you look at the last 3 months, I was down for ages. My average cost is $823. I only have one share, unfortunately, but I do have a lot of semiconductor exposure and I need to limit that. So that's one of the reasons why I haven't bought. But yep, up over $1,000 now. KLA, a very solid performer, up almost 35% for almost £200 gain. So that's it. That's my portfolio. It was a very challenging week, but I never really had any anxiety. I didn't feel any anxiety at all, even though when the market dropped. I think that's a good thing as an investor, just to not panic and know that these dips happen. They're regular occurrences within investing, and it actually gives you opportunity to buy things at a cheaper price. So whenever I can, at least deploy capital at least once, sometimes more if it dips further. And I'm really happy with the journey so far. So yep, 133,500 current portfolio, and let's see what the next week brings. Thank you very much for watching this video, and I'll see you on the next one.